Coming all over to the current scenario where Iran, US, so markets are uncertain. What makes a strong portfolio in such case?
So if you keep these three things in mind,
Let's be honest for a moment. Right now, the world feels unpredictable. You don't know what's going to happen next between Iran and the US. Markets react overnight, oil prices fluctuate, and every day there's a new headline. And somewhere in all of this, there's one silent question most of you may have. What should I do with my money right now? And that's the very obvious question. Because the truth is, you can't control war, but you can control your financial portfolio. And that's exactly what we will be asking Dhruvan. How to think about your investments when the world feels uncertain.
Coming all over to the current scenario where Iran, US are in,
it's a
very odd situation, and so markets are uncertain. We don't know. Like I recently read, petrol rates are higher, one peak, and even the diesel rates are going skyrocket. So, what a person should do in this war situation when it comes to financial safety, or even how to maintain their portfolio? What is your take on that?
See, I think situations are like this are beyond our control. I mean, if you look at history, there have always been wars. There have always been crises, pandemics, recessions, inflations. And every single time these things happen, the market has taken hits, but it adapted to those and it also grew. So the main default that investors do is that they hear certain types of news, they panic and they react unnecessarily. That's when they lose their money. I mean, as long as you keep it simple, be disciplined and consistent with your portfolio, you won't lose any money. You'll actually gain money during times like this. You should just stick to three simple things. Number one, diversification. You've heard the saying, right? Don't put all your eggs in one basket. That's where this applies. You should spread out your investments over various assets or various funds, and that's where you actually save some money, because in case one fund goes down, the other fund stays up, and you're basically safeguarded.
So balancing out.
Yeah, it's a balancing act. That's the best way to put it. And the second main thing that I would say would be allocation. So diversification tells you to diversify all your assets. Allocation would tell you how much to put and where. So it doesn't have to be 100% equities or 100% debt. You should allocate a certain amount to debt, certain amount to equity, and if there's a remaining amount, you should put that into safe assets. And the third most important thing would be consistency. See, you just keep that discipline and you keep that consistency going. You'll gain money where you're supposed to lose money. And see, that's where you can safeguard your portfolio for times like these.
Thank you for answering that, because in such a situation, I always come with a common question where I always ask myself, where should I put my money? How should I secure my money? Because we never know what are the market scenarios. But yes, it's fluctuating. I find certain it's good, also certain it's, I would say, neutralized. As you said, being consistent is the only.
Being consistent is the main discipline that you should have.
Okay, and also, like, can you tell our audience in terms of what is the mistake people are making in such situations, because looking at the market going up and down, get panicky. So what are the steps, or what are the things which they shouldn't even think about?
So let's take this war, for example, the US-Iran. We saw a crisis in the prices of gas and petroleum. So many investors might panic and they would unload their shares in certain gas companies or energy sector. And see, sometimes when they do that, the entire market reacts to it, and that means more losses for you. So instead of reacting to news and panicking, you should just work on your portfolio and allocate certain funds so that they are safeguarded in case the market takes a turn for the worse.
That's a very powerful way to look at it. So what makes a strong portfolio in such case?
Okay, so imagine your portfolio as a ship, and your ship is sailing in an ocean. The ocean is the market, and the waves that you encounter are certain crises or wars, events that happen. And so the way you ensure your survival is how strong your ship is. So a strong portfolio is always diversified, is carefully allocated, and it depends on your discipline as an investor. So if you keep these three things in mind, your ship can sail through any sort of ocean and no wave will ever come close to crashing your ship.
So you're saying discipline beats prediction.
Yeah, that's it. You don't need to predict what the market is going to do, but you can predict what your portfolio will do in case the market takes a turn. But it's very important because if you're not consistent, if you react wildly to certain events or news, you lose money regardless of what. So if you're consistent, if you make smart decisions, you'll save money or you'll earn more money.
Yeah.
Who doesn't like?
Yes. Who doesn't like that? Earning more. Yeah.
You heard Dhruvan just said you should diversify, allocate, and you should be consistent with it. Because you may not know the next move of the world, but you should always know the next move of your portfolio.